The RBI governor gears up to present the first monetary policy for this fiscal, that's FY19. The street has priced in a status quo already. But Poonam, my colleague, joins in with the street expectations ahead of the RBI credit policy. Poonam, what is the street expecting besides it being a status quo today?
Well, Aisha, in fact, yes, a status quo with a neutral stance, but a caution commentary is what the street is expecting from RBI. And I guess that itself, any change in terms of the tone, will it move from a cautious to a dovish tone? I think that is something to be very, very keenly watched out for, because people are, in fact, pricing in rate hikes in second half. In fact, the probability of a rate hike in second half has only increased. But as of now, if you look at the entire rationale for a status quo, there have been two developments. One is that the headline CPI has come off and the growth recovery is also at a very nascent stage. The lead indicators, just for instance, the manufacturing PMI was just at a 5-month odd low. So yes, the growth recovery is at a nascent stage. That needs some support. We're seeing the headline CPI coming down. But if you look at this entire poll, when we were speaking to so many respondents, they stated that nearly around 33% expected rate hikes in second half. That percentage has now moved up to 56%. So 56% are now expecting rate hikes in second half. And the reason being is the core CPI is remaining sticky, as well as there are fiscal concerns. We're also seeing that oil price is again the joker in the pack, I guess. Not just that, there are also concerns in terms of the MSP hike, as well as if you look at the entire monsoon, we are yet to see the monsoon, and fiscal concerns still are there. Not just that, RBI may also want to wait and watch out for how the entire trade war will impact growth. I guess that would be another important commentary to be watched out for. So lots of moving parts. Most of them are expecting that there is a higher probability of rate hikes in second half on account of these fewer risks. Not just that, even if we also need to watch out for RBI's commentary in terms of the liquidity. If the liquidity tightens, that does bring in an upward bias to the rates. So watch out for RBI commentary even on the liquidity, as well as how they would manage the entire second half borrowing. Besides that, of course, the entire trade war commentary, its impact on growth, and most importantly, this entire NPA situation in the banking system and the current dealings that we are seeing both for ICICI as well as Axis Bank. Any commentary on in terms of corporate governance issues should also be keenly watched out for. As of now, a status quo with a neutral stance, but if at all the commentary is even slightly dovish, I think it would be positive for the bond markets as well as for the equity markets.